I'm always looking and assessing, to your point, the market for this item, and I never want to pay the actual axe price. My dollar has to always be worth more than a dollar. That's my mentality.
It's just something that I live. It's just something that I live. Hey. It's just something that I live that this world don't live. It's just something that I feel that this world don't feel. I gotta keep it real. J.E. Get 'em. Just something that I live that this world don't live.
Welcome to the Let Bob podcast. It's your boy Ant. Today, Dave's not with me yet again. He's chilling though, man. He got some things going on the family side, man. He's a new father, man. So he's doing his thing. You know, we respect family over here, Bob. Just in case y'all wondering why he's not on these podcast episodes with me, you know, we want him to get that time in with his newborn. But today we got an exciting guest for you. You know, we're all about Black excellence, and we got a gentleman today that represents that. And I'm excited because it's a brother in finance, man. Anytime I can talk to another brother in finance, it's always good to my spirit. So today we have on Mr. Marcus Shaw. He's the CEO and president of AltFinance. So, Mr. Shaw, talk to us about AltFinance. What is this mission that you're on?
Anthony, thank you so much for inviting me to be a part of the show. So AltFinance is a new initiative. We're about a year and a half old, and we are an organization whose mission is to create more diversity in the alternative investment industry. That includes everything basically outside of stocks and bonds. Okay. So private equity, real estate investment, private credit, venture capital, hedge funds, everything outside of things that are publicly traded. We want to create more diversity in that space by creating partnerships with HBCUs to help pipeline HBCU students into careers in alternative investments and support the industry while we're doing that.
No, that's cool. And for my audience, can you bring it down so we can understand? When you say alternative investments, I get it. I follow you. Things like VC funding, for example, or private equity. Can you break that down in a way that my audience can follow you and see what you're talking about?
So, and I'll tell you, it's a hard thing that we haven't been talking about for a long time. Alternative investments are things that you don't have a lot of transparency around. They are not traded in the public market. Many of the companies, you can't go and find a stock ticker on it, right? These are companies that are privately held by companies that buy these companies, improve upon the company, and then sell it. And when they sell it, the company that invested in it, the alternative investment firm, makes a lot of money.
Okay.
Now, how does that come back to us? Well, our pension funds, whether they're teacher pension funds, whether they're our 401ks, people that are putting institutional money together are investing in the funds that are buying these companies or financing these companies or buying these buildings. Okay. And so the alternative investment is an asset class, a type of investment, right, that has been used really over the past 30 to 40 years, has really grown in its importance and market share over the past 30 or 40 years to improve returns for investors and the clients that investors support, like teachers and firefighters and workers that have a 401k.
No, that makes sense, though. To your point, that's kind of hidden, right? We don't really see that. We understand when you say 401k and pension, but a lot of times it's blind towards we just put the money in and, we look years later and hope it's grown so that we can leverage it for a retirement opportunity. But what you're saying, I'm assuming, is your company focuses on getting more people of color, people like us, involved in these transactions so we can make some of that big money that's being made in that space is what I'm taking.
That's exactly right. And so, the alternative investment industry globally has over $10 trillion of assets under management. That's trillion with a T.
Wow.
Okay. So it's a significant amount of money.
Wow.
And we are not participating on the investment side of that with the capability that we have, right? There's a lot of potential. In fact, Black investment professionals in this space are less than 2%.
Wow. Nah, hey, I'm not. We push stock market, right? We're
Right.
our audience to get involved in the stock market because the numbers and the disparities are very, very similar. And when we talk about bridging the racial wealth gap, these disparities have to be adjusted, right? They have to be addressed. And companies like yours, companies like Bob, we it's our responsibility to get the message out and explain it so that we
Right.
can create the interest points, right? And so I think for me, that's the exciting part about what you're doing. And then of course you're working with HBCUs, man. Those are my favorite. I'm a fam grad. I went to the best HBCU it is. So to hear you working amongst the family is always good. How has that been received? Like, are the students engaged? Are they taken to this opportunity, given that it's in an industry that's, not you wouldn't, expect to be cool, or it's not something that's really talked about in the marketplace? Do you get much resistance when you're recruiting, or how does that work?
I'll tell you, Anthony, and I want to give a shout out to FAMU.
All right.
We're actually headed down there in a couple of days to do some recruiting. So FAMU is one of our partner schools. So I'll give a big shout out to Anthony Buchanan when we're down there.
Please do.
I'm a Morehouse grad, so
Oh man,
I'm not going to argue which HBCU is the greater.
Hey.
We are all part of a great universe, right? But certainly FAM has a rich history of putting people like yourself in the world of business. To your point, those schools have done an outstanding job of helping, improve our exposure and understanding of publicly traded markets, stock markets. We know who the investment banks are. We know who some of the big institutional public asset managers are, right? They're like the T. Rowe Prices and the Fidelities. We understand who those are. But really, what we haven't done a great job of getting exposure to are the companies that are growing on the private side. And just to put it in reference, right, the market share of assets managed by the companies that we're talking about, that we're educating students about now, when we were in school, and I won't date us, right? But when we were in school, these companies were managing less than 10%, right? Many times less than 5% of assets for endowments at our own schools.
Wow.
Today, those numbers are 30 to 40%.
Wow.
Okay. So in our lifetime, an industry has evolved inside the industry that you and I both spent a lot of our life in, and we just didn't know about it. We weren't getting exposed. We weren't having conversations like this about that industry. What's happening now is when I go into a campus, and we got some incredible young women and young men who were coming into our program from FAM, and I talk to these bright students that are already going to investment banks, many of them, right? They know about that. But I tell them, are you ready for the next step after an investment bank? Are you aware of where some of your colleagues and counterparts that are at that investment bank, do you know what they're thinking about 3, 4, 5 years down the road? Right? Because it is private market investing. And there's some reasons we can talk about if we want to get in depth of why people will do that. But ultimately, you can make very good money in the public markets.
Yes.
But the structure of how performance is rewarded in the private market allows you to make an incredible amount of wealth for your family, for your community, for your, alma mater as well.
Yeah, and that's a space none other than Robert Smith. It's how he created a lot of his wealth.
It's how he created a bunch of his wealth.
Yes.
Right?
So, and I know, I just so happen to know about him because he was, I studied him before he was known, right?
Right.
And he was known for acquiring software companies, right? And so by me being a software engineer early on in my career and still coding here and there, although I'm running this empire, I was just, encouraged to see the results he had gotten, right? I was studying him. He surpassed billionaire status. And so it kind of gave me that energy necessary, but I still didn't understand the market he was in. Right. I knew what he had done, but I didn't have a low level understanding of how he had achieved it. But to your point, I didn't see anybody else who looked like him participating. And when I was reading his story, he kind of talked to those points. And I think often that's kind of our reality, right? You have these industries or these opportunities, where a tremendous amount of capital is being transferred between transactions. But unfortunately, we're not playing an ownership role in those transactions, or sometimes we're just not even in the room at all. And so when we see today and we see the results, we're seeing as a culture, I think to your point, discussions like this are healthy. Exposing, little Johnny in the projects to Marcus Shaw, who's in this alternative investment industry, is a sign of hey, I can do that too. There's somebody who looks like me. Maybe I don't understand everything he's saying, but he's saying something about how I can make money with my mind, and we can plant seeds through exposure. And so I think for us at Bob, we're very big on bringing Black-owned businesses like yourself that's doing things that are amazing for the point of exposing it to the community so other people can see what's going on. How does their pension plan grow in value, or how does their 401k grow in value? Like what's going on? And I think that's a very healthy way of getting more of us interested. So how did you get into space? I know you said a Morehouse grad. A good friend of mine, Morehouse, one of my business partners, Morehouse. I love my HBCU community. So to your point earlier, we're all a family. So I'm not voting against you.
No, listen, you surrounding yourself with some good men, Anthony. You surrounding yourself with good men, but you're a good man as well, and so it makes sense that you have done that. I'll tell you a little bit about my story, and I want to double back on a couple points that you made around the community. I grew up in Maryland, right outside of Washington, D.C. My parents, when I was growing up, we never talked about money. Now, my parents were both educated, but they both probably skipped about 3 generations in one lifetime. They both came from parents who were not educated. They grew up, my father grew up in the 30s and 40s. My mother grew up in the 40s and 50s, and both had an opportunity to go to college at some point. But we talked a lot about education. We talked a lot about, service and being a person that's service oriented. We didn't talk anything about money when I was growing up. We never had a conversation. I cannot think about one dinner conversation, one conversation in the car, going to a ball game about money. My father would spend a lot of time in the military. My mother was a career educator. So it wasn't something that really crossed our general, topics for conversation. And so when I got to college, I was an engineer and was a math and electrical engineer major at Morehouse and then at Georgia Tech, and decided that I wanted to create things. And for me, the breakthrough was I had one of my, very good friend of mine, one of my college quarterbacks and later a business school colleague of mine who's a great friend said, you should think about business school. And I went from an engineer to the world of finance in business school and went to Wall Street as an equity research analyst. So I covered telecom and operated in the public equity space. Okay. Like we were talking about traditional investments. That's what I knew at the time. That was popular. Again, the private markets were interesting, but it was more innovative, right? We were kind of at the fringe of that. So I spent a decade operating in the public sector, or not in the public sector, I'm sorry, in public markets, and then did some work in venture capital and economic development in Tennessee and down in your home state of Alabama as well. So, my life has been interesting, man. I also put a focus probably in the last 10 years of my career also around diversity, equity, and inclusion, and worked for a nonprofit that focused on that. That's also doing fantastic work on campuses across the country. But, one thing that I wanted to hit on is throughout my career, and this is, I think, what's led to some success and a key point, I think, for anybody that wants to be successful in the investment world. Number one, you got to have skills of observation, right? And these are things that I think people in our community, whether you're in the hood, you're in the country, you're living, on the Gold Coast of whatever city you live in, right? The good thing about us is we come from all different places, right? Yeah. And so it doesn't matter. You could be, raising pigs down in North Carolina. You could be sitting in the hood in Atlanta. You could be up with the guys in Silicon Valley and San Francisco, we've got some real ability to be observant, right? And so I'm always looking for things, man. I'm always paying attention. Okay. Like I'm looking at the painting behind you. I'm like, all right, this brother's in finance. He's got the bull. He's bulled up, right? He's got a bullish market attitude. The other thing is you got to be, and it's the second part of being observant, you got to be intellectually curious.
Yes.
So when you see something and you don't understand it, I mean, with the internet, brother, we didn't have the internet when we were young, right? It was encyclopedias. Like, I spend more time looking things up, right? If I see a piece of artwork, Google, like, artists. How do I find that artist? Where are they from? What's their inspiration? What's their style? Who else is buying them? I go into a restaurant. First thing I do, count how many seats and tables they have at that restaurant. What time of day is it? The waiter comes along. How much do you do? How much does this restaurant do in their best week? How much do they do in their worst week? 25,000, 50,000? Now I start thinking about the value of the restaurant. Right? That level of observation, I think, is critical to being a good investor, and having that intellectual curiosity is key to finding success, whether you're investing your personal money or whether you're doing this as a job.
So why I've always been attracted to finance and the financial markets in general is because it's culture agnostic, right? It doesn't really matter where you come from. To your point, observation is a gift for us all to adopt, right? Anybody could make that level of assessment. It's just learning the value proposition of having that skill set, right? And I think to your point, when you see, Chick-fil-A's line wrapped around the building at every Chick-fil-A that you see, right, no matter where you are, to your point in your business, that translates to value and sometimes can translate to opportunity given where the life of the business is. Like, are they just starting and they got that kind of line? Are they, been operating for a few years and they have that kind of line? Or if they're like an established brand like Chick-fil-A, it's still value there. So that's more of a conservative approach. Whereas when you're, diving into a smaller business with that kind of line, there's, risk that goes with it, but you can hedge your risk by just making the proper observations. To your point, being a great investor.
You hit on the third, right? So observation, power of observation, intellectual curiosity. And the third thing that I always say is you got to have a comfortable relationship with risk.
Yes.
That's something oftentimes in our community, some of us that people would say are the most successful are the most risk averse.
Yes.
And some of those folks that we don't believe in so much, they actually have the healthiest relationship with risk, right? There's this paradoxical relationship sometimes that exists in our community with risk.
Yeah.
And so, look, if you want to go to work and work 9 to 5, you're going to create a good life for your family. Okay. Yeah. You can do really well. But there's a reason why of that, $10 trillion I talked about, it's give or take 100, 150,000, maybe 200,000 people in that whole workforce. So it's not a big workforce, right? I mean, you think about it as peak, General Electric had 300,000 people working for the firm.
At one company.
Right? Walmart's probably got over, a few million people worldwide.
Yeah.
Working for the company. This whole industry, $10 trillion, just to put in perspective for those that are counting, right? US GDP is about 22 trillion. So this industry, just when you match it up, now it's a little bit of apples and oranges, but to get a sense of how big this industry is, it's roughly half the size of US GDP. And it's controlled by as many people as live in, part of Birmingham.
That's interesting, man. That's an interesting fact. Oh, man. That's good. But that tells you there's opportunity, right? But it also tells you the expertise has to be there. Because when you have that limited amount of resources operating that much capital, that lets you know there's a pure focus there. And you do have to know how to perform. And so I like the fact that you guys are taking your knowledge, your expertise, your skills, your experience in the industry, and going into these HBCUs and giving back to the culture so that we can get more Marcus Shaws and more Anthony Buchanans out here understanding their money flow,
Yeah.
understanding how to use your mental to generate wealth and how to protect yourself in times where maybe, when you're on these physical opportunities to generate value, your body it's a fact. Your body won't last, right? It's a human fact that you will give out. Whereas if you're doing mental work, you have a life cycle that tends to extend a little longer to give yourself the ability to create that legacy all the way into you. How old is Warren Buffett? Warren Buffett's like 80 plus now, 90.
Yeah, he's well into his 80s. I think he's looking into 90 here.
And he's still grinding. Hey, he's just looking at reports and being very aware and assessing and making more investments, right? So I think that's where our culture, where we as Blacks can like learn that we have to get into these spaces where it requires less of our body and more of our minds so that we can position ourselves to own things that we can build a culture up and be able to lend opportunity.
Absolutely. I mean, I challenge everybody out there, and it doesn't mean you're always thinking about money. You're
Correct.
just stretching that mental muscle, right? When you see something, think about how it's valued. Why is it worth what it's worth?
Yeah.
Right. Like that to me is like my favorite. I call it my favorite kind of mental calisthenics.
Like that.
Right? Anything I look at, it could be a car, it could be a building, it could be a piece of clothing, right? I mean, my kids are into sneakers now. And so, I always look at StockX. I'm like, does this market make any sense to me? Right? Like, what's the supply and demand? Like, why is it that, Nike can release a shoe and the retail price for what it hits the market at is way different than what the retail price, right, from Nike is. So if a shoe, right, let's talk about Dunks. So Dunks were a big popular shoe in 2022, right? Everybody wants Dunks. Everybody wants Jordan 1s.
Yes.
They still retail like 120 for the Dunks, 110, 120 for the Dunks, 150, 180 for the Jordan 1s. But yet, you and I can never buy them at that price.
No.
Never, right? And so when you go on StockX or one of these other, exchanges for sneakers, they're always like 250 to 300.
Yeah.
So why wouldn't Nike just sell them for 250 to 300 from the jump? Right? This is a question I've been thinking about for a year. And I always challenge students because students, young people of all races, they love sneakers and they love this sneaker game. And there's some people out here that are hustling and they got the bots and they're making a ton of money off buying and selling. But like, this is probably one of the biggest puzzles to me in the market.
Because it's interesting you say that, because value is in the eye of the beholder. My uncle Dexter, who's my mentor, he taught me that at a young age. I was in real estate for a while as an investor, and I bought a lot of properties for him. And I would get the asking price from the seller. And let's say the asking price is, let's say, 17,000.
Right.
And so we're in Birmingham. This is at 2009, 2010. So this is after the Great Recession. Everything's on sale for cheap. And so I would tell him the ask price, and he'd tell me, okay, we'll offer him 11,000. And I would be just crazy. I was like, 11, but they want this much. They want 17, 18,000. And he's like, tell him 11. And I was like, but you're going to miss the deal. And his attitude, and I would learn this attitude later in life, his attitude was that there's always a deal.
Always
a deal, right?
Mid-ass spread.
It's always a deal. And so value, he's like, value is always an eye of the beholder. So for me, the value is, I'll give them 11,000. They may take it, they may not. But either way, that's what I see. That's how much value I see. Yeah. And so I after, learning that from him and going on to read a lot of books that's how I approach, anything I purchase of significance, on my home, cars, and things like that. I'm always looking and assessing, to your point, the market for this item, and I never want to pay the actual axe price. My dollar has to always be worth more than a dollar. That's my mentality. And so anytime I'm transacting, if that's not the case, then I walk away from the deal. But it's the same attitude that I would expect to take on in your industry.
Yep.
It's definitely the attitude in my industry, because it's so funny that in the stock market, it's really that same approach that if you're buying stock in a company, you should be doing the exact same thing. One, you should understand what's their business proposition.
Right.
Two is, why are their customers buying it? What's the deal, right?
That's right.
And three, how long do you think that will continue? That should be, three of the things that play a role in what you buy. And four, and probably the most important, it's got to be something you believe in. To your point earlier, money is not always a driving force as to decisions you make. Money is great. I love it. I love to make it.
Right.
But my comfort, my peace, and my reason behind ownership or spending my money is more important. And what a company is doing, right? If I don't believe in something a company is doing, I personally don't want to profit from that.
Yeah, I think that's dead on. And most of the successful investors I've talked to over my life have said the same thing. I think your uncle's, a brilliant, you're lucky to have a mentor. That's kind of, so you, Anthony, you're leading me into all of these points, right? So observation, right? Intellectual curiosity, understanding and being comfortable with risk. And then, fourth is mentorship.
Yes.
This business of investing is an apprentice business. There is no skipping high school or college and going straight to the league. No matter who you are in this business, you are, for the most part, right, starting off at the bottom. Everybody starts off as an analyst.
Okay.
And your ability to succeed over the long term is largely driven by your ability to build relationships so that people trust you with capital and trust you, more importantly, you'll hear this a lot, decision making.
Yes.
Right? Because you're not always going to win. But if people believe in your ability to make the right decision, they'll stick by you, even if that decision turns out to be wrong in an instance or two, because they're betting that you'll make a lot of decisions over the course of your life, right? So decision making. The other element of this around mentorship is somebody's got to tell you where to go, right, and how to make moves, because people have seen the movies, right, and there's a ton of television shows, Billions, Industry, right? Wall Street, Money Never Sleeps, Original Wall Street, Gordon Gekko, right? There's a ton of movies and shows out here that dramatize this business. I will say most of those things are drama, but the pace, right? The pace of the business is dead on. And so you got to have a mentor that allows you to make decisions in a way that can be repeated and to make those fairly quickly. And so, I mean, you hit on all four. One thing I'll before I jump here, I'll say that we've got three incredible partners that funded the launch of AltFinance and really drove this organization: Apollo Global Management, Ares Management Corporation, and Oak Tree Capital Management. And those are three very, very large alternative investment firms. Between the three of them, they manage almost $1 trillion in assets. And Mark Rowan, who is the CEO of one of those, he talked about, he uses this term called purchase price matters.
Okay.
And essentially, right, the point here is you always want to think about your returns based on how much you pay.
Yes. Yeah.
So if you pay too much up front, right, and this goes for everything in life.
Yes.
Right? If I go to Best Buy and I buy a TV that, is top of the line, no discount, it's the brand new model, but the model from a year ago, the only thing that's changed is where they put the name on the bottom. If I could get the same TV for 30% less, if that TV breaks a year earlier, or I need to get it, I've already paid for that.
Yes.
Right? So this is not just about buying billion-dollar companies. This is a way of thinking about leading your life.
Correct. In general, I agree 100%. I'm 100%. That's definitely how I transact. I'm looking for the deal,
right?
I think that's an approach that keeps you growing financially, and that lends into literacy. But as much as I'm enjoying this, I could do this all day, man. With talking my language. Unfortunately, we've come to the end. So we want to thank you, Mr. Shaw, for coming on, enlightening us on the industry, letting us know the moves you're making. We definitely want to continue to follow you, highlight you, like put as many eyes on you as possible, because we want the culture to see what this Black man is doing for the community and how he's stepping into a space and changing the game. So we really appreciate that. Again, you can find Let Bob at We Are Let Bob on all channels. You can find myself at I Am Let Bob on Instagram. And just remember, you can download our app. That's Let space B-O-B, Let space B-O-B, Let Bob in both app stores, and start your investment journey today. And we appreciate you, and we're out.